I will introduce first you as a branch manager of Hyderabad. Later you can introduce our FM. Okay. వెల్కమ్ పైసా హెల్త్ యూట్యూబ్ ఛానల్ వ్యూవర్స్. ఈరోజు మన యూట్యూబ్ ఛానల్లో మనకి యూనియన్ మ్యూచువల్ ఫండ్ నుండి యూనియన్ మ్యూచువల్ ఫండ్ మేనేజర్ వచ్చారనమాట. అదేవిధంగా హైదరాబాద్లో పనిచేస్తున్నటువంటి యూనియన్ మ్యూచువల్ ఫండ్ బ్రాంచ్ మేనేజర్ ఆయన కూడా మన యూట్యూబ్ ఛానల్లో మనకి అవగాహన కల్పించడానికి కొన్ని ప్రశ్నలకు సమాధానం ఇవ్వడానికి రావడం జరిగిందనమాట. ముందుగా నేను బ్రాంచ్ మేనేజర్ని ఇంట్రడ్యూస్ చేస్తాను. ఆయన తర్వాత యూనియన్ మ్యూచువల్ ఫండ్ మేనేజర్ని ఇంట్రడ్యూస్ చేస్తారు. మనం అడిగేటటువంటి ప్రశ్నలకి వాళ్ళు సమాధానం ఇవ్వడానికి ప్రయత్నం చేస్తారు. ఓకే, ఫస్ట్ నేను ఆయన పేరు నాకు అంత బాగా నేను పలకరించలేను. అభిజిత్ బ్రాంచ్ మేనేజర్ యూనియన్ మ్యూచువల్ ఫండ్. ఆయన పూర్తి పేరు నాకు తెలియదు. ఆయన ఇప్పుడు ఫండ్ మేనేజర్ని ఇంట్రడ్యూస్ చేస్తారు. ఆ తర్వాత నేను కొన్ని ప్రశ్నలు అడుగుతాను అన్నమాట ఫండ్ మేనేజర్ గారిని. ఆయన వాటికి సమాధానం చెప్తారు. Sir, please, BM Avijit ji, please introduce our fund manager to our Paisa Health YouTube channel viewers. Then I will start asking questions to our fund manager. Please go ahead.
Surely, Manuji, very good evening, and thank you for having me in your live YouTube channel. So, yes, we have our senior equity fund manager, Mr. Sanjay Bembulkar, with us from our corporate office, Mumbai. Sanjay ji has joined us last year, about 11 months back. In his enriched professional career of 12 years of experience, in his prior stint, he was a part of Canara Robeco AMC as a fund manager. And prior to that, his stays as a research profile, he has been a part of LIC AMC, as well as Quantum Advisors Private Limited. So, Sanjay ji has managing 4 of our equity funds. He's been working with as a co-fund manager with our CIO. And today we'll hear a lot from his side as well. So over to you, Sanjay ji. Thank you.
Okay, thank you, Avijit. Sir, FMG, welcome to my YouTube channel. Thanks for coming on my YouTube channel live. Without wasting your valuable time, I will start asking you some questions. Those will be helpful for my viewers. Okay, thank you very much for that, for coming onto my YouTube channel. Sir, my first question to you is, why people should invest in mutual funds?
Sure. Thank you. Thanks for having me, and thanks for having Union Mutual Fund with your live audience. Basically, on mutual fund side, mutual fund gives a lot of advantages to retail investors who have smaller sums to invest, and when getting equity exposure, it is often difficult for any retail investor to have a diversified portfolio of equities, and which is managed by which is managed with the good knowledge of equities as well. So mutual funds offer this kind of opportunity that you get diversified portfolio based on your risk appetite. You can select, choose the kind of risk which you want to take, and accordingly you can choose the schemes in consultation with the advisor which you may choose. And mutual fund gives you that benefit of diversification. It is a low cost kind of instrument which gives opportunity for retail investors to participate. And on the other side, it is highly regulated product, so a lot of regulation which keeps our hard-earned money safe as well within the risk bands which scheme is supposed to take. So a lot of diversification, low cost, and regulation makes this as a very investor friendly product, and gives so that these are the basic advantages of mutual fund.
FMG, you talked about regulations. Today I heard about 10th class paper leakage in AP somewhere in India. Without regulation, there is a rumor, whether it is correct or not, I don't know. There is a rumor that a SSC paper got leaked in India somewhere today itself. Without regulation, we cannot control those who are willing to loot others' money, others' property, others' rights. Without regulation, we cannot control those people. Even we are correct, other people may not behave correctly. That's why regulation is a must. Right, sir? Otherwise, without regulation, पेपर भी लीक हो सकता है, जिन लोगों ने सही तरह नहीं पढ़ लिया उनको जॉब मिल सकता है। अगर रेगुलेशन है तो जिन्होंने अच्छी तरह पढ़ाई किया उनको जॉब मिलने का संभावना ज़्यादा होगा। राइट सर? Yes, sir.
Right.
Yes. Thank you, sir. And my second question to you is: can mutual funds run away with investors' money? Is it possible?
No, the structure of mutual fund is like that. There is a trustee company which manages the asset management company to manage the schemes. So regulation requires that there is going to be layered regulation on mutual funds. There are a lot of regulations on the fund management side, on the asset management company side, as well as on the trustee company side. And there is a lot of regulators which keep on very close monitoring what these companies are doing, and are they anyway deviating from the regular duties which they are supposed to do. So it is impossible in a way to run away with the money, because in the digital system at least, when things are happening directly from the bank account to the asset management company, and from asset management company directly into your bank account, there is unlikely that such kind of incidents can happen.
Yes, I agree with you, Andy. Yes, I agree with you, FMG. In case of Reliance, when Reliance group of companies are Anil Ambani group of companies are in problem, he is not able to investors' money. Everything is safeguarded because of tight regulations. All the investors are safeguarded in spite of that promoter got into trouble, and I think he defaulted some money for some lenders. But that mutual fund company investors, all of them are safeguarded with the SEBI regulation. I agree with you that
Right, but I must say that in mutual fund, obviously, we are taking the market risk. So whatever moments of market are where we make good investments or bad investment, that obviously we have to keep it in mind. That's where I think advisor like you also is important from that angle, to understand and guide retail investors to come to invest in a right instruments, and as well as in the right asset allocation product as such. So obviously, though it is difficult and it is impossible to run away, but obviously the market risk which we are taking as when we are investing in equities is or any other instrument through mutual fund, is something which investor has to be aware of.
yes, yes. Yes, sir. Thank you very much for your valuable answer. And my third question to you is: how Ukraine and Russia war will impact Indian markets? Because
Right, right.
how severe it will be.
Sure. So, see how global these wars are played out. They are obviously currently contained within the Ukraine and Russia, but whether they will spill out to other countries or not, that is something which only future will tell. At the same time, currently, when we are talking about these two countries specifically, directly India may not get much impacted because of these two countries. There is no major exposure which our economy has, or which our companies have with respect to these two countries specifically. However, we have to note the second order impacts. So, second order impacts meaning that what implication which oil prices may have, what implication which metal prices may have, what implication which wheat and other commodities may have as a fallout from this war. What is happening is that as a result of this war, all or major European and other countries are now focusing on their own security, their own security of specific products like, let's say, oil, gas, or diesel, petrol, even food commodities, etc. And those kind of moves may have second order derivative on Indian consumers as well. When we'll see suddenly the prices of some agri commodities going up, suddenly the prices of gas, etc., going up. So these kind of implications will have on our economy. And with respect to that, investors and as well as companies are acting in anticipation of that. So most of the companies which are exposed to such kind of trade, they are passing on these price increases to consumers, leading to certain kind of inflation being passed on to end consumers as such. So these are the second order implications which war is having on Indian economy as such.
So according to you, the impact will be very minimum. Maybe in oil industry.
As of now, yeah,
Okay, as of now, at least as of now. In future, it may be severe, or
correct,
it may decrease also. Anything can happen. As of now,
sure,
it is
yeah,
minimum.
right.
Okay, that is a good answer for us. Okay, next question to you is the reason for Sri Lankan government default on bonds given to other countries, credits taken from other countries, and the hyperinflation in Sri Lanka. What are the main reasons for that? And uh, can you explain in brief or in detail, whatever form you want?
Right, right. So, if you look at Sri Lanka is our neighboring country with 80 plus $1 billion of GDP as such. So, not a very significant from economic perspective as such. However, from geopolitical and other angles, it is a key country in our region for India as such. If you look at Sri Lanka, though I'm not a very big expert on this geopolitics and Sri Lankan economy as such, what I understand reading is that there were multiple decisions which were taken regarding fertilizer subsidy, regarding shift to organic food chain as such, and which also were one of the reasons for the sudden change or sudden decline in the agri production for Sri Lanka. Apart from financial prudence, such kind of moves are also key to monitor. And I think current fallout is the result of these multiple events which have happened in past and are happening currently also in Sri Lanka. I think this answers about Sri Lanka mainly. Yeah.
Okay. Okay. Main reason is the freebies given to the people, right? Main reason. The discounts, freebies.
So as I was mentioning, so there were certain decisions made financially which did not result into this financial income. Apart from that, there were certain decisions on the farming side also which I think have impacted. Apart from the freebies which you are mentioning.
Yes, yes. Lot of things, not only freebies, lot of things added to that.
Right.
Okay. Please tell me, in 2000, in 2020, after COVID fall in our Indian markets or global markets, we have seen very good rally in 2020 ending and 2021 ending also. Now, since 4 to 5 months, we are seeing a consolidation and some kind of fall. Is rally over in India? Does bull run over in
Right,
India?
right. So I'll give you slightly longer answer to your simple question. If you look at the uniqueness, the way which we manage the fund is through fair value approach. And at Union Mutual Fund, the fair value is calculated for all the companies which we invest in. What the fair value is what we understand about the company is that on the long term, how this company is likely to take shape, what kind of profitability this company may have, whether this company will be better than their competitors or whether it's a better quality company than the peers. That is something which we are more interested in, and that is how we choose each and every stock which goes in our investment universe and also in our fund allocation when we are doing to any of the equity stock as such. And that's why at Union Mutual Fund we give very close attention to what is happening to the fair value of the companies. So when COVID had happened, when you alluded that during the COVID time, post-COVID time, there was a lot of rally. What we did a simple calculation on our fair value is that market had fallen more than what the fall in fair value was. So fair value typically is a long-term economic power of any company, which in a way you can also imagine in a way of DCF, that discounted cash flow, this what this company can make over a period of time, and that is the how this fair value is roughly calculated. So COVID reaction was very stark and very unusual to what fall was there in the fair value. So fair value they dipped slightly, but market reacted very sharply to this drop in fair value, and which gave us opportunity that market was now much more into fair value zone, or it was rather more discounted zone as such, and that discount got rectified over last 1-2 years time. And that rectification of discount, this reduction in the gap between the fair value and the market price, has led to this sharp rally in last 1.5 years, of 2 years rather. Now, we have to also understand business. These companies are not constant. These are doing businesses. Competition is changing. All the variables are also changing at the same time. Profitability is increasing, decreasing, depending on how you see these companies and their economic power. So, what we focus on is how these companies are reacting to the changes in economic variable, like we discussed in changes in the oil prices or changes in the inflation, and what kind of profitability will happen over a period of time. What currently these fair values are indicating, that market is slightly at a premium than what it should be. So this earlier deep discount which was there during COVID time has not only corrected, it had gone to significant premium. Again, in last 3-4 months, it has market has corrected, and market is at a slight premium to what it should be. So Indian equity market has a tendency to trade near the fair values which we calculate and which we have understanding of. Going ahead, we are anticipating that these fair values will grow at a double-digit kind of rate. So market, whether it will be at a premium to fair value or discount to fair value, that I may not be able to tell in the near term or medium term. But in the long term, it will broadly range in the fair values where they are. So currently, our models, our proprietary work which we do, and all investment team is actually involved in calculating these fair values day in day out. And the outcome which is coming to the fore is that these large gains which we have seen in last couple of years, they are slightly behind us. Now we already got them. Going ahead, fair values are based on the current estimates of GDP and based on current economic forecast which we have, are expected to grow at a double digit rate. So you can say 12 to 14% is the rate at which fair values are likely to grow. And based on that, we market in the long term also should give similar kind of, they should converge with the fair values over a period of time. That is what we are expecting from markets.
Okay. Okay, thank you very much. According to your view, markets are expected to grow 10 to 12% in coming years. Now,
So just to rectify, so fair values are likely to grow at 10 to 12% from here on. And in long term, we have seen markets historically at least have traded near to the fair values is something which I can say.
okay, fair enough. That's a nice answer. Very helpful for our viewers. Okay, and next question to you is, does America's inflation affect higher inflation? Last 10 years, say ज़्यादा है अभी inflation in America. Does it affect India? That FIS who will withdraw more money from India? Because last 6 months FIS are selling hugely in Indian markets. Will it continue because of America's higher inflation? What is your view? But and in spite of that also, Indian markets will grow. What's your view?
Sure. So these are interesting things which are happening, and we have to keep them on our radar. What changes are happening in the America? Not only because it's a large country, but American bond is the backbone of overall global financial system. Most of the investments are pegged to American bond as a risk-free rate, and then a calculation happens based on that about all the valuation of bonds as well as on the equity markets globally. That's why this inflation is very key variable to track. The kind of impact which I am foreseeing or which I can see for Indian market is on inflation. We talked about whether companies have that pricing power to pass on, whether they are able to still pass on that pricing power because of the brand which they have created, because of the habits which they have created in consumers, etc. Needs to be seen on company to company basis. But more or less, there is going to be this change in the monetary policy globally. So globally, we have seen very expansionary monetary policy, which Federal Reserve as well as European banks have now highlighted that is going to reverse over a period of time. And in next couple of years, we are expected to see almost increase. The Fed dot plot, it is indicating that 225 bips of kind of interest rate increase is expected to happen over a period of next 2 years. So obviously these high inflation kind of environments, which we have to watch out really closely, they have implication on changes in the interest rate. They have impact on interest rates, and interest rate in turn has impact on valuations in India as well as globally. So nonetheless, these are very important variables to track, and the impact on Indian companies has to be seen on the company to company specific, on the bottom up approach, which we do in the fair value approach when we are calculating fair values of company. That is something which we take into account.
Okay, understood. Okay, now please tell us why process is important for the investors when they are doing their investments.
Right. So process is something which is very crucial to us as at a Union Mutual Fund, and we also suggest or advise very strongly that process should be followed across by the investors and our partners as such. What process tells us is that process tells us about discipline. There can be many things which can come up as a surprise, or there may be variables which can change suddenly in the global economy as well as global financial system, and the process allows us to be disciplined, and process entails that how we'll react. So I'll just give you example that when there is a sudden change or sudden shock to the economy, like what happened in COVID, we saw suddenly people panicked and market sold off very sharply. Had we not having the process of, let's say, not knowing that where what is the fair value of any company, we wouldn't know only that whether now company's price is lower than fair value, higher than fair value, is it cheap or is it still costly. So any process with when you follow it discipline will guide us that what to do when even in the unprecedented kind of time. So process protects us on the downside, as well as it gives us understanding that how we should react when there is a bountiful or when there is a upside which has been realized. So process in a way guides us with respect to how we should work. That is number one. Number two, there may be certain biases which may have. So I come from different background. Somebody else may have come from different background. We have some companies which we like, we don't like, and accordingly we may have some preference when we are investing. So, for example, some people may have affinity to only equity market, and they will invest only in equity. Whereas their actual asset allocation, which when you will assess, you will find that okay, there should be certain disciplined approach to asset allocation, where asset allocation should go, or in asset equity market, which asset class they should choose, which stock classification they should be more inclined to. So process, when it is followed, it will guide us. It will get rid of our biases, and it will tell us that okay, this is irrespective of the biases. If these are the variables, if something like this is happening in the economy, what should be our process? What should be our asset allocation? Where should we go? Which stocks we should choose, or which are the companies which have become cheap, or which companies which have become costly? And such kind of guidelines are critical when we are dealing with such kind of when such kind of environment where a lot of macro variables are changing, a lot of disruption is happening. You are seeing all the industries which you may look at. Majority of the industries are going through certain kind of disruption, and the process will protect us in such kind of environment. That is our strong belief, and that's why we believe process is very critical to our investments, and we adhere to our process very strictly.
Okay, thank you very much for your answer. Next question to you is, what's your view on global markets? What's your view?
So, right. So, as I was alluding to, there are two big variables which are changing. One is on the inflation side, as Banuji was also highlighting. Inflation is rising on the rising trend, and it is having serious repercussions on the not only consumers but also on the capex cycle, the way companies are taking call about or thinking about their future going ahead. Number two, change is on the monetary policy. The declining interest rate scenario, which we are seeing for almost like last 35-40 years, is now changing, and it will, in my opinion, personal opinion at least, it will change for a significant part of future as well. So that we have to watch out for. So this change in interest rate as well as change in inflation are the two big variables which are going to change in next 2 3 years time, and then we'll see how global economies are reacting to them. Apart from that, obviously, the geopolitical and other variables which we discussed in earlier questions are also a matter of concern which we have to keep on our radar very closely. And these three, four variables, interest rate and inflation, are key variable from financial angle, and geopolitical risks, which can spiral into major global event also that we have to keep a watchful for. So, based on these two variables, which are changing, firstly, inflation as well as on the interest rate, the view about global market is slightly we have to look at asset class to asset class. Particularly, if you look at equity as a market, where I work in on the equity side on the Indian market. So globally, for equities, change higher inflation as well as higher interest rate is not something which is very good for equities. What happens is that one possibility is that demand may reduce because prices have gone up from consumer side. So companies face this pressure to pass on the price increases. If they are not able to pass on the price increases, there is a margin pressure or profitability pressure which comes on their financials. That is number one. Number two, this increase in interest rate is historically has been seen as a negative for equity market. When ask rate for equity investment increases, obviously the valuation which market investors ascribe for such kind of equities is tends to go down, and that has been seen across cycles historically. And that's why very strong view on the global equity market is becoming difficult. However, these variables which are changing or increasing on upwardly definitely have negative repercussions on the global equity market as such.
Okay, and my question related to Corona and after Corona. Now Corona fear is minimized very little now. When prices or markets are going up, everyone is saying market is going without any reason. There crisis will come, or recession will come very big. The market may go down very heavily in future. It should come down like that. Many people are talking about it. That kind of fall is yet to come, or is it over? Without any fundamentals, this COVID market bull rally happened, or are there any reasons for the market rally in these 2 years?
Right. So, as you would also experienced in your career, typically what happens is that markets are forward-looking. They typically discount the future, what is going to happen. They are lead indicators. They are looking forward rather than looking backwards. So, when Corona happened and market corrected, obviously market participants, investors saw that what is going to come over a period of time, and that is what gets discounted by the equity markets or by the investors into the price which currently market is trading at. So when we are seeing that what is likely to happen, obviously we don't know what is likely to happen. There can be a lot of possibilities what can happen based on but we can take a guesstimate. And as I was mentioning, current economic construct is indicating that there is going to be at least companies' fair values are likely to grow in double digits. That is how we are positioned. Second thing which we as investors can look at is actually we can back quality companies when they are available at a reasonable prices. That is something which is in our hand. We can allocate money to the quality companies which can deal with the whatever economic mayhem may come over a period of time. The companies which are strong companies will be able to weather that such kind of storms. So in selecting stock selection process at Union Mutual Fund, we prefer quality companies. And what quality companies is clearly defined as companies which are having a tendency to grow faster than their peers. They have higher financial strength in respect to ROE, ROCs. They are better than their peers. They are gaining market share. Such kind of companies, when they are backed with the quality management, those only companies which get filtered in our criteria when we are selecting any stock for our investors. We understand that our investors have given money to us with a lot of trust, and we have to be doubly sure when we are allocating such kind of money for our investors, and that's what gets reflected in our process as well. And that's why in stock selection process we have to select only quality companies when we are investing in such kind of environment. I think as a investors, I think these are the things which we can do. We have to be disciplined. We have to back quality companies when they are available at a reasonable prices. And this is what exactly Union Mutual Fund is striving to do in the investment process which we have for all our equity funds.
Okay, thank you very much for your answer, honest answer. Okay, now my next question to you. Okay, now tell me, maybe I think you are not into marketing in mutual funds, but you may be knowing this issue. Uh, can you tell us, my channel viewers, what is the time HNI investors are entering into market and retail investors are entering into market? Are both of them are able to uh, get the same kind of profits and same kind of right entry and exit strategies? Are they able to execute, or is there is any difference? I think you got
So
my.
as a mutual fund, obviously we deal with a lot of retail investors, which may be of a different category. When they are coming with mutual fund, obviously you have our offerings which we offer, and those are the offerings which we have for our investors on the retail side. As such, uh, I don't have exact data which you are asking for with respect to HNI investors or retail investors as such, and that's why I'm not able to give you right exact answer with respect to this specific question.
Okay, okay, no problem. Okay, okay. Now my next question is, okay, uh, okay. According, it may be your personal answer. According to you, what you will advise investors whether to invest directly with mutual funds in direct plan, or with the advice of any financial advisor? Which one is best for the investors? Any idea for you? Your personal idea you can share.
So sure. So while as a mutual fund, we offer both the options to investors, investing through direct as well as investing through advisors yourself. What we typically talk about are we have to understand the financial implications, and we have to understand the financial efficacy of any investor when they are coming for the equity investment. If somebody is having very good understanding about the financial market, they are able to clearly understand the risk rewards, what are the changes which are happening in the overall financial system, and they are able to adhere to a disciplined approach, then they may think about direct. But we nonetheless have seen historically that most of the investors may not have the time or expertise to allocate what kind of allocation should be there to equity market, as well as across asset classes within equity market, which kind of funds they have to come to. So we reckon most of the such kind of individual investors can take help of distributors or channel partners where they're investing in mutual fund. Though it may look like there is some kind of a cost to going through these advisors or channel partners as such. However, in the long term, if you think about such kind of advice will help. Typically, it is expected to help investors to achieve better performance and more disciplined approach over a long period of time. And such kind of disciplined approach is always welcome, and particularly when we are dealing with financial assets, when we are dealing with real money, hard-earned money. I think any guidance which is available or any more disciplined approach which is there is more welcome, and that's why I would leave it there. Yeah.
Okay. Uh, nice answers, FMG. I have done with my questions. If you want to tell us tell my channel viewers anything related to uh, any fund or any suggestions or any investment tips, please tell us.
Sure, sure. Thanks, Banuji, for having us. Actually, it was quite a pleasure for us to be here and interact with you and your investors today. So, what we typically, what I would like to emphasize as a closing remark is basically on two things. We have to follow a disciplined approach, not only in the investing, but also when quite disciplined or is process oriented or not. And I think Union Mutual Fund obviously is having very disciplined and process oriented approach towards investing in something which I would like to emphasize on. That is point number one. And second, in we are in a very dynamic geopolitical as well as global economic environment as such. We have to be really cautious. So I would request or urge investors not to extrapolate the past returns, what we have earned, what you have seen in last couple of years over a period of time. We have to be quite disciplined or quite cautious when we are allocating money to in the current geopolitical and global financial dynamic model, and that is something which we have to be really cautious about. So I would urge investors to be disciplined as well as be slightly cautious on the when they are investing in the market as such at the moment.
Okay, thank you, FMC. Thanks for your valuable time after market hours for spending your around 40 minutes valuable time with my channel viewers and giving your valuable advices to my investors. I would like to talk to you few more minutes also, but it's you are very busy. I know, being a fund manager, you will be very busy. Thank you for that, for your valuable time spending with me and my channel viewers.
Thank you, Ban.
Thank you, Ji. Huh? Okay.
Thank you, Banuji.
Thank you, and thank you, Avijit also. Thanks
It's
for
always
your-
been a pleasure
thank
for
you,
us.
Thank you for both of you. Okay, bye.
Thank you.
Thank you, sir. Thank you, sir. Avijit ji. Bye.
Bye, sir. Thank you.